the ultimate property strategy guide for newbies. Are you ready to learn how to invest in real estate successfully, even if you've never done it before? Think about how smart planned real estate moves could change your financial future. This video will show you the best ways to buy property for people who are just starting out. It will be like a roadmap to wealth and security. Want to know how to start building your real estate business right away? Wait and see to find out. Getting started in the real estate market may be an exhilarating and overwhelming experience all at the same time. Given the abundance of techniques and approaches that are accessible, it is essential to select the one that is in accordance with your financial objectives, level of comfort with risk, and time horizon for investing. In this video, we will discuss the most effective property strategy for novices, providing you with a thorough guide that will assist you in making well-informed decisions and achieving success in the real estate market. Acquiring a fundamental understanding. First and foremost, it is necessary to have a fundamental understanding of property investment before delving into specialized techniques. Residential properties and commercial properties are two main categories that can be used to classify real estate. For those who are just starting out, residential properties are typically easier to access and less complicated. Properties that fall within this category include single-family homes, duplexes, and multifamily residences. It is important to be familiar with the following terms: cash flow, the net revenue created from a property after all expenses have been fully paid. The term appreciation refers to the gradual rise of the worth of a property over time. The difference between the current market value of the property and the amount of the mortgage that is still outstanding is referred to as equity. ROI, which stands for return on investment, is a metric that is used to determine how profitable an investment is. Selecting the appropriate course of action. A select few property investing techniques stand out as particularly advantageous for novices because of their ease of implementation, minimal risk, and potential for consistent profits. Those who are just starting out in the world of real estate investing can benefit from the following set of strategies: buying and holding, house hacking, real estate investment trusts, REITs, and rent-to-rent are the four strategies that are included in this list. Buy, hold, and hold on to. The technique known as buy and hold entails purchasing a piece of real estate and keeping it for an extended period of time, which enables the property to increase in value while simultaneously earning rental income. Due to the fact that it is straightforward and has the potential to generate wealth over the long term, this method is perfect for novices. Putting buy and hold into practice. Steps to take. Research. Conduct an analysis of the local markets in order to locate regions that have a high demand for rentals and a great potential for growth. The first step in obtaining funding is to obtain a mortgage or one of the other available lending choices. Check that you have a decent credit score and that your income is consistent. When selecting a property, it is important to select one that is both reasonably priced and likely to increase in value. Things to think about include the location, the amenities, and the condition. Property management. Determine whether you will manage the property on your own or whether you will enlist the services of a property management firm. Tenant screening. In order to guarantee a steady income from rentals, it is important to thoroughly screen prospective tenants. The benefits include a consistent income from rentals, long-term appreciation. There is the possibility of tax advantages. Challenges in property management are included among the risks. There are changes in the market. There are fees associated with maintenance. House hacking. The practice of house hacking is a fantastic method for novices who have limited financial resources. This entails owning a property that contains multiple units, residing in one of those units, and renting out the other units. While simultaneously accumulating wealth, this strategy helps offset expenses such as mortgage payments and other costs. The following are the steps to apply house hacking. Look for duplexes, triplexes, or fourplexes in neighborhoods that are attractive in order to find a property that is suitable for your needs. Financing. Financial take advantage of a variety of owner-occupied financing options, such as FHA loans, which demand less initial payments. This strategy involves moving into one of the flats and renting out the other ones in order to fund the costs of living. Investing in real estate investment trusts. Study the many types of real estate investment trusts, REITs, including equity, mortgage, and hybrid, as well as the diverse sectors: residential, commercial, and industrial. Create an account with a brokerage firm. Create an account with a brokerage business that specializes in real estate investment trusts, REITs. Diversify. Invest in a variety of real estate investment trusts, REITs, to minimize risk and enhance returns. Keep an eye on the performance. Maintain a close eye on the movements in the market in your investments. It provides passive income. That is, diversification. Liquidity shares of REIT firms can be bought and sold with relative ease. Volatility in the market is one of the risks. Interest rate changes are a concern. Fees for management. Rent-to-rent. When you rent a property from a landlord and then sublease it to tenants, you are engaging in a business model known as rent-to-rent. Through the use of this strategy, you will be able to produce rental revenue without purchasing the home. It is a low-capital technique that is highly recommended for novices. Putting rent-to-rent to practice. Steps to take. Find properties in locations with a high demand for rentals. It is important to identify properties. The process of securing agreements with landlords to sublease their buildings is referred to as negotiation with landlords. Market the property to prospective tenants and furnish it, if necessary, in order to attract them. The responsibility of managing tenants and maintaining the property falls under the category of managing tenants. A little initial expenditure of capital is required. The generation of cash flows swiftly. In the realm of property management, flexibility is essential. Risks, complicated legal and contractual issues to contend with. Property management responsibilities. There is the possibility of disagreements with landlords. Important considerations for novices. As a novice investor in real estate, there are a few crucial aspects that you should bear in mind regardless of the approach that you eventually decided to implement. Make sure you've had a strong financial foundation, which includes a decent credit score, money for a down payment, and an emergency fund. This is the first step in the financial preparation process. Risk management. It is important to be aware of the dangers that are associated with investing in real estate and to devise ways to reduce those risks. Establishing ties with real estate agents, property managers, and other investors in order to acquire assistance and obtain insights is the fourth step in the networking process. Your options for financing your real estate investment. Obtaining financing is an essential stage in the process of investing in real estate. The following is a list of common funding choices available to beginners. Traditional mortgages are home loans that require a down payment and range from fixed to variable interest rates. Conventional mortgages are also known as conventional mortgages. Mortgages that are backed by the government and demand a less down payment are known as FHA loans. These loans are perfect for first-time home buyers. There are loans available to veterans and active-duty military people that are known as VA loans. These loans offer favorable conditions and do not require a down payment. Private lenders are individuals or businesses who provide loans to borrowers based on the value of the property and the prospective worth of the investment. Working together with other investors to pool resources and divide risks is what we mean when we talk about partnerships. Putting together a group. When it comes to real estate investment, working with a group of professionals is frequently necessary for success. Consider the following important individuals of the team. Your real estate agent will assist you in locating and evaluating available properties. Mortgage brokers are responsible for assisting clients in obtaining financing and locating the most favorable loan conditions. Property managers are responsible for managing day-to-day operations, maintaining tenant relations, and doing maintenance. Repairs and renovations to real estate are the responsibility of the contractor. An accountant is someone who offers advice on taxes and helps with financial planning. An attorney is someone who manages contracts and ensures that legal requirements are met. Establishing a trustworthy team can reduce the amount of time spent on the investing process and assist you in more successfully navigating problems. Long-term planning and strategies for leaving the organization. When you are just starting out, it is essential to have a long-term perspective and plan out your exit strategies in advance. Here are some things to consider. When it comes to investments, it is important to establish both short-term and long-term financial objectives. Plan how and when you will sell or refinance properties. This is what we mean when we talk about exit strategies. One can choose to sell the property at the peak of the market, refinance the property in order to extract equity, or leave the property to the heirs. Over time, diversify your portfolio by investing in multiple types of properties and markets to distribute risk. Throughout the entirety of your financial journey, having a well-defined plan and exit strategy can assist you in maintaining focus and making decisions that are based on accurate information. Don't miss out on our future videos packed with valuable real estate strategies and investment advice. Hit the subscribe button and ring the bell to stay updated. Join our community and take the first step towards mastering property investment.